Yeah, yeah. Yeah, yeah. Yeah, yeah. Are you ready? Are you?
These are our main concept today. Statement of cash flows. What are we going to do? We are going to look at introduction of statement of cash flows. We are going to look at why is a statement of cash flow needed. We are going to look at the operating activities. We are also going to look at investing activities and financing activities. These three are the main components of a statement of cash flow. My name is Mr. Hammer. My phone number is 04766 Fitch Online Academy founder or owner. For more understanding, I highly encourage you, to those who are doing financial accounting, I highly encourage you to go and visit Kaplan. And to those who are doing A-level accounting, I highly encourage you to go and visit these two books, the Harold and the Sokari. To those who are also doing financial accounting, you can also visit Harold. Is a very good book in terms of accounting. Introduction. What is a statement of cash flow? It is a financial document that summarizes the cash inflows and outflows of a business during a specific period. I just want to give an example. Banks, microfinances, and also the key players, which you know, TM, Pick and Pay, and OK, also prepare what you call statement of cash flows. We have key financial statements. In this case, the statement of financial, another definition is that the statement of cash flows, also referred to as the cash flow statement, is one of the three key financial statements. But we do not only have three key financial statements, there are five. What are they? We have the statement of profit and loss and other comprehensive income, and the statement of financial position, the statement of changes in equity, the statement of cash flows, and the notes to financial statements. There are five. Henceforth, in this scenario, this definition highlights that we have the income statement, which is known as the statement of profit and loss and other comprehensive income, and also the balance sheet, which is now currently being known as the statement of financial position. And we are being told that the cash flow statement reports the cash generated, the cash which we have generated and also spent during a specific period of time. The cash inflows, we are just saying how much was recorded or how much we gained in the business, and outflows represents how much we utilized, the amount which we used in the financial business. Henceforth, let's look at the key highlights of the statement of cash flows. We have the key highlights. Since the income statement, the balance sheet are based on the accrual accounting, those financials do not directly measure what happens to cash over a period. Henceforth, we now know that a cash flow statement, it is essential for management, analysts, and investors to review. An investor just doesn't invest or inject his or her funds in a business without taking a look at the financial statement. What is the main reason of looking at what we call the financial statement is highlighted above? An investor would want to look at the financial statements to check if the business is healthy and is it safe to invest in the business. Just look at it right now, guys. How do you see it? Looking at the statement of cash flows of Telecel Zimbabwe, as an investor, would you recommend yourself to invest in Telecel Zimbabwe? No, that's a very very big red flag. Why? Because Telecel is facing very very difficult times. We have the three sections of a cash flow statement, which include the operating activities, the investing activities, and the financing activities. These are the three main aspects or the sections which we have in the cash flow statement. We have the companies can choose two different ways of presenting a cash flow statement. You can actually prepare a cash flow statement using the direct method or the indirect method, but in most cases, if you want to know more about cash flow statement, just listen to me, guys. Kindly go on any financial institution, for example, commercial banks, the 13 licensed commercial banks in Zimbabwe. For example, we have ZB, Nedbank, CBZ, First Capital, Agribank, etc. Go and check on their websites. You definitely see a real statement of cash flow, and you definitely have a great opportunity to witness a realistic statement of cash flow. just for your own understanding and also for knowledge enrichment. Why are we going to need the cash flow statement in the business? Cash is the king. Why is cash king? Cash is king. Why do we say cash is king? This is an old saying about the business. Do we say cash is king? Cash is king. Why? Because we are saying that a business needs cash to run. For example, a school actually needs school fees to run. That's why you hear sometimes they say, go back home and check school fees. Cash is king. For example, even at home, you need cash to survive. That's why they say cash is king. This is a very, very good keyword. Looking at another useful aspect why a cash flow is needed, it actually assists us in comparison. For example, how the financial health of the business, how the company is running its operations. As I've stated earlier, you can actually compare how the financial health of a business, for example, the financial health between what you call Telecel Zimbabwe versus Econet Infraco or Econet Wireless. You can actually determine the financial healthiness of the business using what we call the statement of cash flows. Then another aspect that it reveals liquidity. It shows exactly how much actual cash a company has on hand to pay its bills, debts, and operating expenses. Also, a company can be profitable on paper but still go bankrupt if it runs out of cash. For example, I want to give you a practical example of a bank. Even just a practical example of the Zimbabwe Stock Exchange. Right now, we are facing a scenario whereby we heard that Econet Wireless has delisted its current shares on the ZSCE. It's another red flag that a company can be profitable on paper. You can say ZCC is being profitable. I can't confirm if it is being profitable or not. By just an example, as you are saying, major key players are delisting their shares. Guys, I highly encourage you to go and research on brokers, as it will enrich your knowledge when you be doing what you call limited liability companies. And another key point is it evaluates financial health. It helps investors and credit assess a company's ability to generate future positive net cash flows and it's for external financing. For example, the statement of cash flows of mining companies, for example, Caledonia, Dali, Liwayo also can actually highlight to an investor if it is safe to invest in that company. Taking a look at another point, it bridges the gap. It reconciles the net income on the income statement with the actual cash balance on the bank balance sheet or the same financial position. It also predicts future cash flows. That's another key aspect. That's where what we call those who want to study further in what we call financial analysts, you definitely analyze the past cash flows and stakeholders. They can build predictive models for the company's future performance. You need, according to business studies, you all know what stakeholders are. And I can give a practical example of a stakeholder. It is a customer. Before I look at the sections of what we call the sections of the cash flow statement, we need to look at the direct method and then the direct method. Though these methods are different, guys. You can see they might have the same height, but they are actually different. Look at the indirect method. We have net income, depreciation, and amortization. I want to explain what are the operating cash flows. I will explain using this example. Operating activities are the principal revenue producing activities of the entity, and also cash from operations include what we call we have depreciation and amortization. As you have seen, depreciation and amortization is added here. This is the depreciation and amortization. It is being added. Why is it being added? You just need to know one thing. Depreciation applies to tangible assets. We have what we call tangible assets such as buildings, machinery, and equipment, whereas amortization involves intangible assets such as patents, copyrights, goodwill, and software. So when you come a scenario and examination whereby you're given an intangible asset, don't mix up with the depreciation. Just need to know intangible assets, they amortize, and tangible assets, they depreciate. Also, we have depreciation and and amortization, they reduce net income in the income statement also. However, why did they reduce net income? Why do they reduce net income? Because just to think about the income statement, whereby we are going to subtract, we are going to treat depreciation as an expense. But when you're dealing with the cash flow statement, we are going to adjust net income because these are non-cash expenses. They are non-cash expenses, and also there are no transactions which are involved. That's why if you come here, you are seeing that depreciation and amortization, we are going to add them. I want to take a look at the changes in working capital. What is working capital? That's the main thing. Working capital represents the difference between the company's current assets and current liabilities. What do I mean when I say the current assets and current liabilities of a business? We are saying any changes in current assets and other than cash. Remember, don't ever include cash when you're dealing with these aspects, because what I want to tell is one thing: any changes in current assets, for example, we have inventory, we have trade receivables. These are the main key players, and you need to know that any changes and also changes in current liabilities such as trade payables other than debt affect the cash balance in operating activities. Why do I just want to explain. What you need to know is that there is a positive change in inventory is from net income because it's a cash outflow. If our inventory, when, for instance, for example, when a company buys more inventory, current assets, they increase. Why are we saying current assets they increase? Because we have bought more inventory. Buying more inventory shows that there was a cash outflow. Having a cash outflow, we mean that we utilized the money. Money was utilized. While it's utilizing money, it just shows us that was an increase. An increase will show us a cash outflow. Henceforth, a cash outflow will be subtracted. You need, let me check here, is there a decrease? Remember, there is an increase in inventory, is in brackets showing that you subtract. 200 was an increase, while it's a decrease in inventory here, you definitely add if there's a decrease because there is a cash inflow. Then we want to look at it's the same for accounts receivables. If accounts receivables, if they increase, it means the company sold their goods on credit. We are saying we sold goods on credit, we did not receive cash. Hence, not receiving cash, there was no cash transaction, even through revenue. Though revenue was recognized, we recognized revenue, but we did not receive cash. Hence, for not receiving cash, this actually highlights that there was a cash outflow. No cash, but we gave the customer some goods. Henceforth, we are going to subtract an increase in receivables. For example, here it's going to be subtracted, and also that's the 200 here. Account receivables. Then for instance, for account payables, I want to explain also again. For account payables, you're saying a current liability like accounts payable, it increases. This is considered as a cash inflow. Why? Because the company has to pay cash for something it purchases on credit. We are buying goods on credit. Remember, we are buying goods on credit and we did not actually utilize the cash, but we took the goods. We are going to pay the cash. Henceforth, meaning to say that if you are going to pay the cash, it means that it's a cash inflow. We received goods. Henceforth, it is a cash inflow, and decrease in a decrease in account payables will be subtracted because we have paid money, while it's an increase in account payables, it is added. It is a cash inflow because we did not actually utilize the money. We want to dive into investing activities. What do we mean by investing cash flow? Investing cash flow just means that cash flow from investing activities, that includes the acquisition and disposal of non-current assets. Guys, there are many marks when calculating the purchase of non-current assets. There are two aspects which you need to know when dealing with investing. We have what you call disposal the proceeds on disposal, and also you need to be familiar with buying or selling property, plant and equipment. What do you need to do to calculate this figure? You need to have knowledge in what you call an asset. We need to have no asset account. Knowledge in asset accounts will actually assist you. You definitely discover that when you'll be looking at a practical example tomorrow, doing what you call the cash flow statement example number 1 on video episode number 3. We definitely, since we are purchasing, we are having a cash outflow, guys. Money is going out. Well, this money is going out. Sale of land, we are going to subtract purchase of equipment. We are going to subtract it. Sale of land is being added. Why? Because we are receiving money from the proceeds of disposal. Right? There is proceeds of disposal. We are having a cash inflow while we are selling land. Remember? Now we are moving to financing activities. What are financing activities? Financing activities, these refer to, I will dive to financing activities. Where are the financing activities here? These are cash financing activities. This is the cash flow from financing activities which result from changes in the company's capital structure. For example, financing cash flows include cash flows associated with the borrowing and repaying bank loans or bonds and ensuring buying back shares. You need to have knowledge in what we call shares. What are shares? These are the stocks which are owned by individuals. For example, you can own Econet Infraco shares, you can own Inictus shares, you can own Delta shares. One of the safest shares in the Zimbabwe Stock Exchange, in the foreign exchange market in terms of Zimbabwean economy. They are very safe. I want to assist you in terms of buying back shares. You will be given ordinary shares, issue of shares. So if you, for example, common share dividends, these are dividends paid according to International Accounting Standard 7 and the International Financial Reporting Standards. You need to know that you can either subtract the dividends paid here, or you can actually subtract the dividends paid under, I will definitely confirm we'll be doing the example, but there is a between the investing, I think it's investing, maybe I will check. Then we are looking at payment of long-term debt. For example, convertible loan stock, those types of debts, loans, debentures, you definitely subtract them. Then we have net cash from financing activities. This net cash change you receive. Then beginning cash balance, you find this balance in the statement of financial position, was you'll be given this information. I'm just using this example, guys, just to explain to you, but when you'll be looking at the format and the example number 1 in episode number 2, we definitely take a depth understanding in terms of these aspects. Then we need to know something. There are other potential cash flow statement difference. For example, under the International Financial Reporting Standards, there are 2 allowable ways of presenting interest, tax, or income in the cash flow statement. For example, many companies present both interest received and interest paid as operating cash flows. You definitely discover that. Others treat interest received as investing cash flow and interest paid as the cash flow. The method used is company's choice. So what you need to do is tomorrow I will definitely assist you. Stay tuned, and also don't forget to subscribe, like, and share. You have it. This was just an introduction, guys. Don't worry, don't stress. Why? Don't stress. Statement of cash flows are very, very easy. Don't stress, guys. Don't stress. I want you to understand something, that these aspects are easy, but you need more practice to understand. Don't stress, don't worry. Have a great day. I hope this lecture and this lesson was helpful to someone who is doing A-level accounting, ACA, and financial accounting. I wish you the best in your studies. Have a great day.